Hey everybody, it's Chuck Barone. Friday, January the 19th, 2024. Let's wrap up this week. It's been a wild one, hasn't it, guys? Looks like the world's changing though. Looks like everything's different now. It's looks like the markets have pretty much weighed the facts. The evidence is in, the jury's back. It's happy days are here again. So the market's rocketing off today. Consumer Sentiment University of Michigan survey will go over, coming in with some surprisingly good news. But before I get rolling, let me take a half second and as always, welcome everybody to the show and thank you guys for your support. We appreciate you guys being here watching these videos every day. All right, so let's talk about markets today. We know we've been getting good economic news. You know, the jobs market, strong. Consumer spending, strong. Corporate profits, most cases, pretty fair. So we've been rolling in this good economic news. Inflation numbers coming down, well down from the peak. Still not anywhere near the target they're talking about, but nonetheless, moving the way the Fed wants them to. They've been able to raise rates and keep them high, killing real estate, but certainly doing the job it's supposed to do, bringing inflation way down from its peak to where we are now. And the market's celebrating. So you look at these markets today, rocket ride, guys. The Dow Jones, up 395 points. 37,863, just rolling right past the lows. Like I said, happy days are here. The NASDAQ up 255, another big day for the NASDAQ. 15,310 on the NASDAQ now. The S&P closing at a record today. That's the broader market. Hard to get records there. Up 58 points. 4,839 on the S&P 500. So there you have it, man. Stock markets rock and roll. It looks like it's going to be a good year. Especially now consumers starting to really believe it. Now, you know, the contrarian in me always wants to run the other way, but in the meantime, let's enjoy the gains while we can, right? In the bond market today, pretty much a normal day. Nice. So you got the 10-year unchanged, 4.14%. The 2-year moved a little bit down, but the yield's coming up just 2 basis points. So pretty much a non-event in the bond market today for a change, which was kind of nice. The dollar still holds its own, down, you know, fractionally 10 basis points. 103.25 in the index, still a good strong number for the dollar. Gold and silver today, mixed numbers today. Gold rallies up $7.20, $2,030.60 for an ounce of gold. Silver falls 16 cents. Surprising me. $22.56 for an ounce of silver. Silver lagging a little bit right now. I'm surprised. I thought silver would take off. You know, when you get people who want to invest even a couple of $100s, you can get a little bit of silver. Not much room there for a couple $100 people to buy gold, right? Oil today falls down 31 cents per barrel. $73.77 for a barrel of West Texas Intermediate, exactly where we expected to be in that trough between 70 and 75. That's where it seems to be most comfortable trading. We've pointed that out to you guys many, many times. And here we still sit right where we expect it to be. Bitcoin today rallies up a little bit after a couple of big down days in a row. Up $577 today, $41,553 for a Bitcoin, still a good strong price. All right, so let's talk about news today. The big news, the University of Michigan Consumer Confidence Survey jumps. Wow, big numbers, comes in way higher, rocketing up 13% to 78.8 on the index. Shows that inflation worries are fading. It shows that most consumers, a pretty large percentage of the consumers they surveyed, have a very positive outlook for the economy. They believe inflation is down and will stay down. Inflation expectations, the lowest they've been since the inflation set in. It's really, really interesting how quickly this all turned, right? Now, this was really interesting about this is that it comes across everything, right? So it's not like it's just a certain segment of people. No, it's all age groups, all income groups, all educated groups, from the highest educated to the lowest. Everybody feeling like everything's good. Consumers showing optimism on household incomes, believing, people have seen a little more income coming in. They just haven't seen the real benefit of it because, they've had prices going up on the stuff they buy every day. But this is really a kind of a really big surprise. In fact, inflation expectations now at a 3-year low. Every group polling significantly higher. What was really interesting about this is that it didn't even matter your political party. Both Republicans and Democrats feeling very positive. I got to admit, it's a surprise to me, because it seems to me like we always have half the country pulling for everything to go to hell so they can win the next election or whatever. And it's been like that for a while. Hopefully we're going to get past that now, I understand you want your party to win the election. The Democrats rooted against Trump like crazy. And of course, the Democrats hating it now with the Republicans rooting against Biden the very same way. This has got to stop. But it was interesting to me that both Republicans and Democrats polled on this feel like things are going very well for the economy. And I guess they can put the politics aside for a few minutes. And I'm glad to see that we need that kind of thawing out, I think, a little bit, right? And I guess with the consumers being such a gigantic percentage of what our economy is, it's good that consumers are feeling better. Imagine that, though. The economy had been going great guns while the consumer numbers were low. Now that the consumer numbers are high, you think people are going to, I guess they really can't spend any more than they're already spending. It seems like everybody's maxed out. But just some fascinating stuff through these numbers. People expecting inflation down, expecting incomes up, expecting plenty of jobs, expecting the economy to do well, expecting profits to stay high. Well, okay, let's see what it looks like next month, right? And the rest of this stuff, all kind of little tidbits here. Wall Street drooling, $8.8 trillion sitting on the sidelines in money markets and CDs. $8.8 trillion. Imagine if some of that money starts flowing into the stock market. You could really see a gigantic rally. And anything that money flows to, that's quite a chunk there, 8.8 trillion. So Wall Street trying to figure out how to get that money into the markets. Last month, existing home sales falling. Not a surprise, because there's no existing homes for sale, guys. So some of this stuff, take it with a grain of salt, right? U.S. home sales are the lowest right now since 1995. So houses, there's just nothing for sale is the problem. It's not there's not demand. People want to buy houses. And there's people who want to sell houses as well. They're just not doing it because of where interest rates were and now where they are. You went from a super low to kind of a super high. Well, so the people with the super low don't want to get rid of the super low. And the people facing the super high don't want to deal with the payment comes with the super high. So here we have housing starts the lowest they've been in almost 30 years. Study shows, this was interesting to me, a study showing 53% of the inflation in the second and third quarters last year, only corporate profits. Corporations greeting out, keeping prices high for us, for the consumer, as their own costs fall, fattening profit margins, not shamelessly continuing to raise prices. And I guess people are going to pay it, but there's your idea of why maybe people are feeling a little more optimistic about inflation. Corporate price hikes are going to end sooner or later. People are going to just start buying alternatives. When that happens, Obviously, if that's half of the inflation is corporate profits, should be pretty simple for them to, if that the corporations stop raising prices as fast, that'll help bring inflation numbers down there, right? New record for consumer credit card debt this month. That's really no news to anybody that's been listening to this show. I've been complaining about it. Expect to hear this now, because until the cycle changes and people begin to pay debt down, credit card debt stops going up and comes down, we're going to break the record every month. So again, this is just another one of those things with, it's an interesting thing to talk about. It just doesn't mean anything, because we're going to break a record every single month until debt gets paid down, which probably will never happen. And that's pretty sad, isn't it? Moody's expecting a lot more corporate defaults coming up in the first and second quarter of this year. We talked that corporate defaults were significantly higher. I think they were like almost at record highs or recession level highs. Now these are not the, the AAA rated businesses. This is kind of the junky stuff. But nonetheless, it shows the cracks in the armor there. So everybody feeling super chipper about all of this stuff. And most of this news coming in is pretty good, right? You got tons of cash on the sidelines to support markets if they can. And markets at record levels already. You got rates likely going to start moving down later this year. You got inflation slowing, and you got an economy that seems to be robust, right? So all things pointing up right now for 2024. I guess that's kind of what they always want to try to do in an election year, so it's not a big shock. It's just a surprise how suddenly it all changed. Because it seemed like it wasn't that long ago, and everybody was decidedly negative about everything, right? Now, well, and let's see what the numbers look like when the Fed actually comes and cuts rates. I don't know, maybe we get a little bit of this like with the Bitcoin ETFs, buy the rumor, sell the news, but interesting times, guys. And lastly, here's you've heard me joke about the road to hell being paved with good intentions. Here we see a perfect example of that. Biden administration trying to get rid of junk fees, surprise fees, and one of the big ones they're after is these bank overdraft fees, where people who are overdraft their checking account by even as little as 15 cents get charged a $35 overdraft charge because they went over what's available in their account. Biden administration trying to limit this because these fees affect the people who were least able to pay them. And it's billions and billions of dollars in these fees. But here's where the road to, that's good intentions, right? Okay, good idea. Let's not hurt poor people. But let's find a way to do it without hurting banks either, guys, because here's what's going to happen. These banks are just going to close the accounts of these the people who chronically overdraft and pay these fees. Well, it's going to go from frying pan to fire when they go from hating to pay overdraft fees to not being able to get an account. And that's where that's going to end up. Anyway, guys, that's it for the day. That's it for the week. Should be another fascinating week next week. Everybody get out. Forget about this stuff for a while. Forget about problems. Forget about all the terrible things. Let's be positive. We were one of the University of Michigan consumer confidence people surveyed. And let's be positive. Let's think about the good things are coming. Of course, this weekend, you know where I'm going to be. Oh yeah, Sunday, Buffalo Bills taking on the big rivals, the Kansas City Chiefs. Allen versus Mahomes. Should be a great, great weekend of NFL football. You know where you'll find me, guys. Anyway, that's it. We'll be back again on Monday to bring you guys the news you need. Go Bills. Till Monday, guys. Take care. Thanks.